Market Structure Mondays with Tim Quast, the founder and CEO of Market Structure Edge. Tim, how was your weekend?
It was good, thank you. It's beautiful autumn weather here in Denver, and we just came back from Austin. I was soaked in sweat with Neil Hamilton on a show last week because it was 95 degrees down in Austin, and yeah, and I was sitting outside, here it's chilly. You guys look good. I caught a little bit of your GM discussion.
Okay, well, let's talk GM. Give us the market structure behind GM. Is there any, let's just see if the market structure likes it. It's one of the biggest positions I've got because I just think it's going to be a major player in EV, and I don't think the story's going away. But give me what the market structure looks like, GM.
Okay. Can do. And Joel, I was laughing about your dog and pony show comment because that's my profession, the investor relations profession. And Ford is a customer of ours on the data analytics side, the public company data analytics side. But I have spent 26 years in the dog and pony show kind of profession, the investor relations profession. And you're right, these analyst days are a big deal. A tremendous amount of effort goes into who's going to say what and how are you going to present your story. And the pandemic changed the way that this happens. It didn't used to be I don't know what they're doing, whether they're doing a virtual event or in-person event, but Ford's was a big virtual event and it was a huge hit. But it's been a period of adaptation for the storytellers, the public company storytellers, the investor relations profession. But yeah, let's take a look. So, and by the way, if many of you use Edge who tune in or you're familiar with Edge, but you can follow along if you like. It's free you just go to marketstructureedge.com. You can put your name and email address in, and you can do this. It's something I think is very important to think about. There's the fundamentals of a business, how they may perform over the long term. I listened to most of the Chris James interview this morning from Engine Number One on Squawk Box, CNBC Squawk Box, and we could talk about that too. We have been party to many battles with activists. From Starboard, Carl Icahn, Elliott, you name it, we have our data has been used in those situations. So we're very familiar. And Engine Number One is a different kind of activist fund. In fact, they're trying to back away from that a little bit here. They're saying they're not taking an activist approach to GM. They're taking a collaborative approach. They believe that the total commitment to a battery electric vehicle, not hybrid, is the approach for the future. And that's what Mary Barra has done at GM. Okay, so let's go take a look. I think you can see this now, right? Am I right?
Not quite yet, but we're getting there.
There we go.
There.
Okay.
We're getting
hide that. And I'm going to use the this is the beta version of Edge 2.0. We're going to release this it's been in beta test for a while here, but it's a browser app now, it's really cool. I think it's fast and pretty slick. But if you want to try this beta version, people, just let me know. Send me an email, tq@marketstructureedge.com. I can put you on the beta list. Okay, so I added Ford and GM to this list while I was sitting in the green room.
Yep.
And let's just look at GM. So here's the I think of this as supply and demand. So for those of you who don't know about market structure, the behavior of money behind price and volume, we're measuring supply and demand, and it's a 10-point scale. The more time stocks spend above 5, the better they tend to do. So a great thing to do is let's just look at GM year to date and say, well, how much time has it spent above 5? Well, it spent a lot more time above 5 until about June, and it's had trouble since. But look at this buildup that we had before this news. So when the stock is above 5, at 5 or above 5, I like to say you buy rising demand and falling supply because that tends to lift prices. It's the same as in the economy. If the supply chain is struggling and there's solid demand for something, the cost of it goes up. The lumber was an example during the summer. So here we have rising demand. Here's an interesting thing. So see this explosion in short volume? Short volume is the percentage of daily trading volume coming from borrowed stock. And this has a sort of meme stock characteristic to it, believe it or not. What happens behind the scenes is if there are no actual sellers, there are a bunch of folks like Dennis who have big positions in their long-term portfolios in GM, and so there's no stock for sale. But then a whole bunch of orders show up in the pipeline to buy GM at higher prices, limit orders, and so brokers can manufacture stock to fill those. That's part of how we have a continuous auction market, and that is absolutely happening here. So that could mean that you get a real pop in GM. It's possible. Overall, I would say over the year to date, it's not been great. It's spent a lot of time below 5, and that's why you haven't seen great performance. It's a supply-demand issue, not a story issue.
Yeah, it's kind of just hung out. I mean, we started the year around the same price, so we haven't done a lot. We're up a little bit on GM. Obviously, January had a big move from 40 to 450, but after February, which is the story for a lot of stocks in the overall market, I think after February, there's a lot of stocks that have just kind of been shopping around going nowhere. You can see it in the IWM. I mean, since February, the IWM is flat. So it's been a market where I've been arguing that contrarians have been getting paid, and if you've been chasing moves, you've probably been paying the contrarians, because we really haven't gone anywhere in the overall market for about 6-8 months.
Yeah, it's interesting that you say that, Dennis, because I think about it from a broad market perspective here. This is it's an algorithm that tells us about the supply-demand balance in the broad market. And so that's this part of the graph. The seismograph is SPY, proxy for the S&P 500. And I, too, have been saying since about April, the supply-demand equation has lost its mojo. It's not that it's been bad. You can see that the line has stayed between this green line, which is 4.0, and the red line, which is 6.0. And right in between is 5. So if you have a 5 to 5.4 market, that's a growth at a reasonable price market overall. But you see it show up more in the broad measures than the full composition of the market. Half the S&P 500 as of last week was down more than 10%. 90% of the IWM, the Russell 2000, was down more than 10%. So you might say, well, how is it then that the broad measures are showing gains when so much of the market is not? How is that possible?
Yeah.
And it's because of statistical sampling. It's an important thing to understand about exchange-traded funds. An exchange-traded fund will pick a basket of things that are representative of what they're trying to track. And that basket is probably going to be the better performing elements. So then if you own things that are part of whatever it is, let's say the communication services exchange-traded fund, which the ETF holds like 20 components, and there are 130 stocks in that sector. Well, if you're holding those that aren't in the basket, they can go down and the broad measure can go up. And the same thing happens here. But I agree, Dennis, that the momentum came out of the market about in April. And so ever since then, we have struggled. We had a very good day on Friday, which the data predicted. I sent a note to the Edge users and said, I expect with this turn in sentiment, we're going to have a nice move. But how long it lasts will be interesting. If we can't get back to 5 and stay there, we're in trouble. Sorry.
Tim, there is some demand in the chat for you to look at Alibaba.
Alibaba.
This stock, before you get into it, I just want to say the market goes up and Baba goes down. The market goes down and Baba goes down. Every single day, the stock just goes down. And I have it in the long-term portfolio. We know I sold half of it back when we didn't know where Jack Ma, when it was 240. I wish I would have sold it all because it's now 140. This stock has got to be the most hated stock out of all the mega caps out there. And its valuation is cheap, but I mean, when you got the China Communist Party actively fighting them, this is what happens. So what's market structure say here? Because this stock just doesn't stop going down.
It's miserable. I mean, look at the amount of time.
It's miserable as a shareholder here too. I'll tell you that. They're making like 7-year lows.
It's so there, you could say, well, there's a faint chance, you may have, if you're in it and you want to get out, you may have a chance in the next week because demand kicked up just a little bit and supply went down. But just look at the chart here. So again, demand on top. The green part is sentiment. This is price, and when a stock spends that much time below 5, it's just no good. That's all you can say. It's the demand for this stock just isn't there.
All right, you heard Tim. If you're into this stock and you're trying to get out, you may get a chance. This week, but
right, it is just not good. But don't sell falling demand. There's no sense doing that. I say it's like the freeway. If you miss your exit, don't compound the mistake. Just go on to the next one. Yeah. You just have to take the next exit.
Wait for the exit.
So if the demand side rises, then leave, because that may be the only shot you get. It happens to all of us. I did this with Discovery B. Last week. I was not paying attention, and it was 10 and 59% short, and I should have been out. And so I lost a little bit on that. I'll show you another one. Here's one where I kick myself. So I looked at this on Friday, and I said, I should buy this. And I teed it up in my Interactive Brokers account, and I didn't do it. But this is what you want to see. This is the exact opposite of Alibaba. See this rapidly ramping demand side and supply side well below the trend? Well, that's how you get a 12% gain in a day. That's what you want. And I keep a momentum portfolio to look at with a set of things that spend a lot of time at 10. And I always profile them. I'll go back test to make sure that this will work. But that's the kind of stuff that you want to buy.
Tim Quast is the founder of Market Structure Edge, joining us every Monday from Market Structure Mondays. MarketStructureEdge.com is your link. Tim, always a pleasure, sir. Thanks a lot.
Tim, if you miss your exit and there's no cops around, you can do a U-turn.
You could, but you might be going the wrong way down.
Just
the freeway
don't back up on the freeway.
Don't back up.
Don't back up on the freeway trying to get to the exit. Just see if you can. Where it says emergency vehicles only. Just slip around one of those. Thanks, Tim.
And that's not driving advice here. We don't give trading advice. We don't give driving advice.
That's right.
I feel like Joel knows this from experience. Thanks a lot, Tim.
Yeah, he does.
Good to see you guys.